I'm waiting for it to settle.
Here we go. On the opening bell, we're 8 minutes into the price line. We close at a 493. We originally sold down to 497 here, and then as we were identifying with MMT, Tom here, right, Tom?
Yep.
That's how that was put in the bottom end. And then when you told me the IR, and I said, well, let me know if it gets north of 35. And if it does, then making the price at 498, it was right around 498 was okay to get in. You can see there, you can see that the call is working. 1580, you can see the low of the call relative to the movement. See, $12 was a close, but look at the low. See, so they printed, this is the margin they printed, and it's a weighted 1022 2011 $500 call on Priceline, and where they're making the current market. All right, so we can see that the call side is still working, and where entries can be had on the opening bell based on these bottoms being put in. Then here thereafter,
$10, Nasdaq at 70 up 22, S&P at 90 up almost about 920.
Here we go. We have a Priceline trade that's been breaking out to all-time highs off of the bottoms. We can clearly see the price print at 501.50. We can clearly, once again, state that the entry was at 498 area on the opening bell. And we had another MMT who shorted pre-market Priceline down to that price action when the actual opening bell opened up. It went out of pre-market mode into real market opening price print, covering and going long off the bottom is the results of understanding pre-market futures, how to short into the open and then go long off of the bottom and let it rip as it is. And now it's getting a little bit weak up here. All right, you can see where we're printing at. Okay, there's the open, and here's the print. So that's how it opened and went down to 497.
Has been put in
and the highs here are 501. You can clearly see that it has a mild pullback at the 501 area on Priceline. And Priceline can make higher highs until the actual reversals will come in. As they start to weaken, you can clearly see the bid and the ask spreads. Another thing about Priceline today I've noticed is the volume. Look at the volume, 140,000 shares. Okay, and it was all of that. That was the open down ratio
56.
to 497 long. And I'm going to conclude that. I'm also going to highlight the Priceline calls that peaked at 1570 are no longer working. Why? Because Priceline is pulling off them intraday highs, Tom, that you were
trying to go short.
All right, well, take a look at where the last reversal bar was, and it better stay below half bar, and that's good. As long as the calls are not working, then your short, if it goes down in value, you'll notice it. Look at the wide bid and ask. You want
short
82s are printing your way. You want this lower end of the range, printing 81. See how it was 499.08, then they printed 498.81? That's the wiggle. That's the robots in there. So you want to watch how they try to sell that bid down.
VIX in at 0. VIX
I'm going
17.
to conclude that Priceline. Very good. And we'll come back to it. So watch that bid and ask. Here we go. We just hit the 15-minute bell, and that's that 550 call. That was at $16 to $18.70. That call contract right now, you can see we're breaking all-time highs, but that contract is not at $18.70. It's $1 below it. Look at MMTs. Now, let's take a look at the 550 put. 550 put. 1960 was the high. 544.63 was a low. 1730. They had a close of 2290. They got down here to 1730. They're 17 by 1810. That's on the 550, 1014. Once again, it's all about premium examination and to understand what these ranges are going to be. And as you're making all-time highs, the puts are working as far as holding the low.
$SPX%
So you're going to really have to break up to the 550 area to get this to drop down to an area that we would be looking at. And it would be right around the 1550 area.
Alert $SPX
below the market. That is if you do blow out the highs. That 540 put was $15 on the high and $12.60 on the low, with a close of $17.30. Look at that bid and ask right now, 60 cents wide. That's on that put side, as we just had a little teeny reversal high, and we got a short sell still working on Priceline, because they've been selling down that bid. And we had MMT Tom, which did an excellent job identifying that trade in the first. Right now, that short's been working, and what it means is that the $500 call is losing all its value to the lows now, because that short is working, and the calls are not working. And on the other hand, the $500 put seems to be working really well. They're not giving them the premiums that they should, because you did print 1575, and we're exactly 17 minutes into the opening bell within the price action structures of long and short in day 7 rally, and we're at 1204.42 on the S&P right now. And we're going to be looking where all kinds of things are happening within our 7-day structured bull rally from last week lows, when we were buying at that 1075 benchmark off of that bottom, and it's working today again. In the first 17 minutes it's working. Okay? And the thing about it is, if my put options are going to go higher, if my put options stop working, then I'm going to be looking at buying over here on the call side. See, the high was 15.7. There isn't a lot of margin, but just remember, it's a 1022. Yes, and it was all based on the price line gap. Okay, and you can clearly see it all right here. I was looking at it over on my other monitor, but I'll pull it in the mix of it. Of the put side, the last print was 1520, but the high was 1575, and it looks like we're putting a bottom in price line. You can take a look at the $500 call, 1570 down here. You can take a look at where this market is being made now. Okay, within the bid and the ask. All right, someone printed 1380. That's a dime off of the low. Now someone paid 1430. They're trying to see if the call side is going to start working. We just peaked at 1589. All done within 1 minute of the 20-minute risk management rule. Is you can watch how markets open up with the public and then analyze them and then get ready to start your day. There's always doing that. However, the movement to 501 to the current bid of 498, that's why the calls are working, are not working, and the puts are working. But look at the premium. They're not giving very much premium. I mean, they were $19.60 on the close, $14 on the low. To that, that's your spread. That's not a great spread. Yes, it is a 1022. It's just not a great spread yet. Because should price line break down back to here, which you'll find out the 20-minute bell just went off. So after 20-minute bell, I'm going to conclude Priceline and Google. Priceline.
Apple's below 10.
Wow. Apple's below 10 IR. Apple had a big reversal off the highs here, folks. So just like the rest of them, you can see where you're getting $2 reversals over here right after 20-minute bell rule. Huh, Mr. Gibson? Well, look at, wow. You're printing down and making lower lows on the day. That is a reversal on Apple at the opening bell. How nice of a short off of that 409. Watch that, Google. It reports earnings tomorrow. Hey, we're still in that 20-minute. It's 6:50 a.m. Pacific Standard Time at the 20-minute benchmark rule. And we're bouncing off the bottom here on that one slightly where he called out those lows. We made another intraday low. Look at the high. And we just made that intraday low. Right now at 6:51 a.m. Pacific Standard Time. Here we are. We're 24 minutes into the opening bell, and we can see that we're finally from pullbacks making intraday highs, all within this half an hour opening. We got to the 20-minute rule. 6 minutes, 2 3-minute bars have gone by. We made higher highs here. Mr. Gibson identified where this had just come down in this very same video, made those lows, and then bouncing back to 408, 43, 55 by 59. So we can clearly see that equities in day 7 in the opening first half an hour is that they're still chugging along, right along in their bull cycle movement. Why? Well, the old saying is they're trying to get in. And as you see them coming up and trying to challenge those highs, if they come up and stall, look at getting short. Or look for lower highs in the price print. 3 more minutes and you'll have the first 30-minute opening bell tape. And we just bounced like a New York jet there. And I just want people to know that when they come down and they bounce,
alert,
like Mr. Gibson,
SPX above Delta line,
there's $2 home run, and that's about the average for this one.
/4 Delta.
Okay? And the Googles made the super highs again. That price line trade, I'll have to visit it in a moment, but I would imagine that the call side started working. Here's the price line. They're catching a bid right here at the 500 handle, $1.75 off its opening 30-minute high. Ranges and consolidations within the pricing structure of the public model. Okay? And we've got the higher beta cap as far as the directional bull rallies going up there and testing these higher deltas that we talk about in pre-market. And we can clearly see that Apple is struggling right 75 pennies or so, or a little bit more. You can see the bid and ask here. But it has to take out that high to the next teeny level higher. And then you would look at where, because it already pulled back once, $3, and then went $3 up. So there's been quite a round trip ticket, right, Mr. Gibson?
Sure has.
Huh?
Yes, sir.
Okay. All right. So the thing about it is they're still on fire. Otherwise, they wouldn't keep making higher highs. And you know what? This was it had a little bit more volatility bringing it down there than it did the other days, didn't it? Because it came off of the highs down to that low intraday in the first half an hour, didn't it? It made lower lows on the opening, didn't it?
Yes, it did.
Okay.
NDS overbought condition.
Here is
1.68.
Here is what I'd like to say.
$SPX intraday percent at above 95.00.
We are ticking right up here at a opening gap from Apple from that teeny range 1, 2, 3. Then we came down on a reversal to 2 teenies, close enough, with double diamond alerts and half bars within the 12-minute opening with another test. But look at how the diamonds fell. And then this is, look at here, diamonds were down here, but we came back 1, 2, 3 teenies to that very gap opening and price action. We tested it, and right here is when we were putting in this was the opening bell gap low, okay? Because it'll tell you right here that it opened at 407.34, because it did. Then what happened is we burned to the highs to 409. Then from 409 back to 406.70. We identified it over here at the bottom, and now it has a reversal coming into play, Mr. Gibson. The IR is below 45. It is below that diamond. And once again, it's 73 cents per teeny line. And you always would like to see two teenies. You've got one teeny to look at. Now you look at how this would get weaker below 35. 0.63 versus 0.77. And you can see the bid and ask right here. The public spread is 12 cents. That's a distribution bar at the high of that same movement, reversal here, and it did not take out that high. And you have a reversal bar in play to the half bar double diamond teeny line here now live. And this whole teeny structure right here is going to be primary, because what you have to do now is you have to close below these diamonds to confirm the reversal top up here of these opening bells. And you would have to drop down toward 15 and lower here to get down here now. And that is a qualifier that the buyer and the seller in Apple here right now is a little weaker. On the other hand, Google continues to break extremely higher highs. You can see the 550 puts getting down here to 1730 now. We're letting that market open up. We're 2 minutes in to the new, so at 7:02 a.m. Pacific Standard Time, I want to conclude the 30-minute price action and recap of Apple, Priceline, and Google, and how they traded on up, and where the bid and ask is right now. 497.58 on Priceline by 498.27. We know that there is weakness built up of the 501.71 that MMT Tom had talked about, getting the high reversal short, got in there with it, identified it 100% correctly, A+. Mr. Gibson identified where moves were happening at certain times within the Apple, and we're going to conclude that in its first half an hourly opening bell. But right now we're 3 minutes into the new hour. 10/12 2011 stockmarketfunding.com. Here you go, below the diamond. You're breaking these diamonds live here. This is what we talked about. You can clearly see that, right, Mr. Gibson? Now, Mr. Gibson, 1 teeny, 2 teeny to the diamond line. A 1 teeny, 2 teeny to the diamond line. And let's take a look at the opening bell once again. Let's do this. Here we are. We're coming back down to this teeny line of that opening bell gap. If you fall weak below 25, you'll break down. And there's a long ways. There's like 1, 2, 3, 4, 5, 6, 7, 8, 9 teenies times 73 cents. So there's a lot below it, but look at that bar. Look at these diamonds right here. Look at the diamonds. Look at the price print to the teeny line. Look at the gap open price print to the teeny line, low end of the opening bar. You're challenging that there now. And what has to happen is everything is happening, Mr. Gibson. It's flirting with it right there. It's not below 25 or 15 yet, so it's testing it right now.